All right, there we go. Now we're recording. Can everybody still hear me? Yep. Okay, perfect. So we talked about some of the pros and cons of the VA loan. So the next thing we're going to do right here is we're going to do like a side-by-side comparison. So for your conventional loan, basically people with excellent credit, things we normally think of when we think about real estate loans, they're going to have to come with anywhere between 3 to 20% of the purchase price. And then if they do between the 3 and 20, they're going to have to pay that primary mortgage insurance. Again, remember the primary mortgage or the private mortgage insurance is basically them ensuring that difference between the 3 and the 20%. Does that make sense to everybody? Okay. Oh, sorry. And then most of the time, the minimum credit score for a conventional loan is going to be 620, and they're not going to have any more mortgage insurance fees other than the PMI. For the FHA loan, which is first time homeowner something, I can't remember what it is right now, but basically if you're a first time home buyer, you can qualify for the FHA loan. It's basically another government backed loan. But basically you're going to have to come up with 3.5% of the purchase price. They're going to require you to have at least a 580 credit score, and then you're going to have some annual fees associated with that. And then we already pretty much talked about the VA loan, but again, if you're a veteran, military spouse, whatever, 0% down payment, no minimum required credit score. Again, remember I told you I had lenders taking 500 credit scores for VA loans. So if a lender does refuse a certain credit score, it's typically because they have this thing called an overlay. So they have certain requirements that their bank wants to have. They don't have to necessarily accept somebody with a 500, but if they choose to do so, then it just meets their overlay for the VA loan. So make sure you tell your clients to shop around if they get told no a few times. And then there is an upfront VA funding fee, and that's typically going to be around 1.25%. I believe they just lowered it though. So there's different VA loan types. So you have VA purchase loans, which is pretty much what everybody thinks about when they think about the VA loan. You also have the IRRL, which is a refinance through the VA. You can also do a cash out refinance. So these are terms you probably want to know if you really like doing real estate. So a cash out refinance, basically they refinance their home and then they're going to take the cash out for the difference. So that way they can use it to do other things with their home. It's a really good option if people want to do some upgrades to their home or, want to improve it to sell it later on down the road. And then they have an energy efficient mortgage that goes along with it. And basically with this program, I believe they can purchase up to, I think it's 10K for solar panels and stuff like that. But definitely talk to the lender to see if they can even do that in the first place. So we talked about the VA funding fee, right? A lot of you all may have heard this for the first time today, but for those people that don't meet the exception requirements for the VA funding fee, basically it's a way for the VA to continue doing the VA home loan program. So that funding fee goes into this program and it helps the VA basically back our loans as we acquire them. So the fee varies, but again, I believe they lowered this recently, so I'm not going to go into percentages that much. And then you may not have to pay that funding fee again if you are a disabled vet with a service-connected disability. Any questions so far? Nope. Okay, so this just talks about the different types of things for disabled vets. So obviously not paying the funding fee. There's property tax exemptions in most states. And then you can also be eligible for like housing grants. So they have special adapted housing, special home adaptations. You can actually get an adaptation done to somebody else's house if you're a disabled veteran. So that might be an option for some of the people that you may be working with. This is just all extra gee-whiz information for you, just in case you come across some of these clients. So if you all have not done any transactions yet, this is kind of how the process works. So they meet with the loan officer / real estate agent, and then you either get them in touch with the loan officer, basically get them pre-qualified. They're going to give their certificate of eligibility to the loan officer. They're going to do their mortgage application, and then they're going to work with you to go find their home, right? And then you go to the underwriting stage, and then you close on the house. So that's pretty much the basic steps for this. So VA loan eligibility chart, essentially anybody that's served in the Gulf War, if they were on in the National Guard or whatever, and they've done at least, I believe it's 6 years of service, they can qualify for it. But don't worry about telling them whether they qualify or not. Typically just send them to the lender and they'll tell them if they qualify. Anybody that served at least 90 days of continuous active duty, they also qualify for the VA loan as well. So some things to think about there. If you don't know what a COE is, it's a certificate of eligibility. There's actually 2 of them. It's kind of funny. So they have a certificate of eligibility for you to go to school when you use your GI Bill, which they don't really delineate that. But the one that they're talking about here is a certificate of eligibility for your VA loan itself. It basically says, hey, you met the minimum requirements to qualify for the VA loan. So typically the lender can pull the COE for everybody. So you don't really have to worry about instructing them on how to do that. But if they do need to find it, just take them to the va.gov website. They can type it in there and go find it. And they don't need it before applying. Again, the lender will take care of pretty much all your problems there. So as far as finances go, when you're talking to clients, their debt to income ratio needs to be at least 41%. So basically, this is how they would calculate it. Take their monthly bills, divide that by their gross income, and that should give you a point something. If it's 41% or less, then they're good. So acceptable forms of income for the VA loan, base pay, obviously, BAH. If they get disability pay, retirement income, and then any of the additional pays that come along with the normal paycheck. The one thing that doesn't count towards acceptable income, and this is important for a lot of the newer vets out that are using their education benefits, is they actually do not take the GI Bill BAH into account for this. Occupancy, right? So there is a certain amount of time that the VA says that people are supposed to live in the homes before they can buy a second one. But if you didn't know, you can actually buy 2 homes on the VA loan. There is no cap on the first home, so there is no dollar amount. You can basically get as much house as you can afford, but there is a cap on the second one. And again, consult with your lender on that before you talk to your clients about it. So you basically get them pre-qualified, like we said before. One of the ways that people can maximize their VA loan, obviously, if you all are sitting through these courses, you've probably heard this a few times. You know, the more multi-residential property you can buy, so like buying a 4-plex or duplex or something like that, the more you can kind of offset the amount of money you have to pay out for your loan. So that's something good for people that live in areas that probably aren't California, because it's really hard to do this in California. But say you're somewhere like Oklahoma or somewhere like that, and they can afford to buy a 4-plex, and they're interested in it, definitely push them towards it. It's a great option, but you can't go above the 4-plex. That's the only caveat. So 4 different units or less probably be the best way to maximize their loan. If you do go the multi-residential route, you have to stay in the home for at least 2 years, at least right now.
I have a question.
Do you have any questions? Is that Andrew?
Yes.
I can't hear you, buddy.
What if
it might be my speaker. Yeah, go ahead.
So what do veterans were to like conjoin, if you will, their VA home loans to buy something larger than a 4-plex? So if, like say there was a 6-unit like building multi-residence, could they do that?
A 6 unit wait, say it
Yeah.
again. A six
So,
unit.
so me and you wanted to go buy a property together, and we both want to like live in that property, but
Oh, I
it's
see what you're saying. No.
yeah,
Uh, typically that wouldn't happen because the way it would work is one of you all is going to get that VA loan.
mm.
If I wanted to live with you, you'd have to get the
Well,
VA loan for that property and then be able to turn around and sell it to the other person. So you'd be more than likely you'd be limited at 4.
okay, very well. Thank you so much.
Yep. And then Jason asked a question about the 6 to 8 months for the IRRL, the IRRL, the refinance. I'm not quite sure, Jason. I really don't know the answer to that. Honestly, that'd be a lender question if you ever get the opportunity to talk to one. Yeah, I'm not quite sure. Any more questions while we go on? I just realized I had my speaker down, so if any of you all asked questions earlier and I kind of glazed over it, feel free to ask them now. No? Okay. So these are the typical steps of the home buying process. You all should get pretty familiar with this. You can actually print this same document off on the EXP website, and it can have your face, name, number, and everything. You can actually hand these to your buyers. It's a really great thing to do. Give them something in their hands physical to let them know, like, hey, this guy really knows what's going on. But this may be good for some of you newer people who don't quite know how this works, but obviously your clients meet with a real estate professional, you get them pre-approved through a lender, you search for homes, you make an offer on the home. The way you do that typically is through the purchase contract. So you fill out the purchase contract. They're gonna either negotiate or sign the contract. Once they sign it, you go into escrow. Typically, escrow lasts long enough for you to get all the necessary things done for the house. So for the VA loan, typically the escrow is at least 30 days because it takes, I believe, 10 days to even get assigned an appraiser. And then he has up to 7 days to return that back to you, at least in the state of California. So escrow, you basically take care of all those things, the appraisal, the inspections, if they need any repairs done, that's what you do in escrow. They do the final details. You make sure everything's buttoned up. You talk to your lender, you talk to your clients, make sure everybody's ready to close. And then you go through the closing process, which typically in California lasts about 3 days. I have seen it done in 2, but basically they sign all the loan documents the first day, then the loan is recorded, or sorry, the loan is funded the second day. So they actually fund the loan and then the loan gets recorded. It can happen in one day in some states. So if your state closing process is a little bit different, don't mind me here. And then this is kind of a cool catch that I use with a lot of my clients. I always say there's 2 types of clients. There's emotional buyers and equity buyers. And what I want my clients is to be both. I want them to love the home that they're buying, but also be in a good financial position whenever they purchase the home to make the maximum amount of money. Maybe something you all can borrow and use when you're talking to your clients, because it's really important that you kind of express to them that they're making the best decisions for them. Really find out their motivations, really find out what they need, and make sure that you're giving them both sides of that token. Give them what they love, but also make sure they're in good financial position, especially when you negotiate. So home showings, if you all have never done home showings before, definitely try to limit your client down to like 3 to 5 of them. You don't want to be doing any more than 5. 5 is honestly kind of a ridiculous number because when you get past 3, they kind of forget what the first house was to begin with. EXP has these amazing sheets that you can use. It's called a home inspection checklist. And basically you give them to your client, they fill them out, and they can put information on there all about the different houses. So it helps them remember later on when you all review. Another strategy for you all when you're doing home showings, ask them, on a scale between 1 to 5, how much did you like this house? Kind of get an estimation. And I typically work with like the top 2 homes and try to push those a little bit more than everything else. And then, yeah, so typically it's going to take about 30 to 45 minutes for a home showing, and then whatever kind of travel that you're going to need to do between the locations. So make sure you guys are considering that. Also, I like to bring little small waters and snacks because the clients typically don't know what they're getting into. And most of the time they want to see homes during the middle of the day. So when they skip lunch and the kids are getting all aggravated, you know, you can just give them some waters and some gummy snacks, and then everybody's all good, right? So just something for you all, tricks of the trade. That's what I do, personal things. So the next thing we're going to talk about with the VA loan here is going to be assumability. So if you've never heard assumability before, it's a really amazing selling point. So assumability means that I can assume your interest rate for the home. So say for whatever reason, I'm gonna point on you, Andrew. If Andrew bought a house and he paid, 120 at a 2% interest rate, I can actually come along later on when Andrew's selling his house at 300,000, buy it at 300,000, but assume his 2.5% interest rate, which is a really great selling point. If you all don't know, a percent of interest can change a payment, drastically. So, for me out here where I am, that could be a difference of $1,000 or more just for 1%. So just keep that in mind. So assumability is a really great selling point. You can actually assume the loan as a non-veteran as well. So if that's also another thing. It's really hard to do. You have to work with some really amazing lenders, but it is possible. It does exist that a non-veteran can actually assume a VA loan percentage. It does count against the veterans. Remember we talked earlier, you can have two houses, but the second house has a certain limit. It does kind of count against that. That house will still be technically on their VA loan, so they'll be buying their second house even though they sold it. But that's just something to think about. Awesome. And we'll keep going. So when you guys make an offer, obviously do your homework. So make sure you pull up the details on the house. Make sure you pull up everything that about the house. Make sure you pull up comps, so your CMAs. And then you want to make sure that your client comes with some earnest money. So typically the earnest money is just there to show the client or show the seller that you're serious, right? So I ran into this, like, can we do a deal with no earnest money? Kind of, but typically you want to have at least 1% earnest money. That's typically what you want your clients to shoot for. I've done it for less than that. I've actually done it for like $1,000 before, but you have to have something in that block for earnest money. It just basically puts something on the line for the buyer, so that way the seller isn't just risking their entire house for the next 30 days for no reason, right? Does that make sense to everybody? I know I said that kind of weird. No questions? Okay, I'm gonna keep pushing then. And then always tell your clients, make the best offer, right? So obviously you want to be able to negotiate, but there's going to be certain situations where you're going to want them to make the best possible offer then, because there might be a multiple offer strategy. It might be that you don't want some sellers will actually walk away from clients. They won't accept any more things after that. Go ahead, John Mack.
Yes. Did you cover the caveat of assuming the loan? I think I missed that part.
Yeah, I actually just covered that. I'll go
Okay,
back.
no, you're good. You're good. I kind of zoomed out. No worries.
There we go. We'll move on to the next one. So this is a typical breakdown of what a payment would look like. So if the home price was 550,000, I believe this is at like 6% interest is what we're looking at here. So you can see your principal and your interest are going to be this amount, tax is going to be this amount breakdown. So I actually get this information from a really cool tool. It's made by Fidelity National Title. And no, I'm not pushing it on you, but it's a really great thing to use whenever you're trying to give numbers to your clients. It's called the Fidelity Agent One. It's something you can download on your phone. You can have that on your phone. You can plug in different interest rates, different loan types, and it'll kind of break down the numbers for you there. So something to think about. Another thing as well, and maybe we'll cover this a little bit later, is try to get the closing costs down for your VA clients, especially in the market that we're in right now. If you can try to negotiate out the closing costs, they'll look at you like a hero for sure. Because a lot of us military people, when we're going to buy property, it's really hard to come up with that $12,000. And I'd rather them save that money and use it to buy furniture. So try to see if you can negotiate that out. I think your clients will really appreciate that. So closing costs covered. So VA limits, closing costs. You can actually ask for seller credits. This is pretty much with most types of loans. You can get up to 4% of the purchase price of the house in quote unquote seller credits. So say if whatever reason the pipes are broken, or actually that's a really bad. Let's say there's a damage to a wall and you want some money back to repair the damage to the wall, or there's a missing rod in the closet or whatever. You can actually ask for that money on the purchase contract itself as seller concessions. And then there's no guarantee, obviously, that anybody's going to agree to anything, but it's always worth trying to get it on the try to negotiate for it. So once the offer is accepted, obviously escrow opens, and again, typically lasts about 30 days for my VA clients here in California. And then this is the time that you do the inspections, look at all the documentation, getting the home appraised, all those things. Tell your clients to avoid taking in new debt and changing their jobs whenever they're under contract, because that's really bad. Also, when they get their home inspections, and I suggest strongly that you advise all your clients to get home inspections. Not only will it save them money on things that they didn't know about, like the leaking windows, the water damage and stuff like that, but it's also another opportunity for you to ask for even more money. So you can actually do a request for repair. In California, the document might be different in other states, but basically you say, hey, this is broken. I'm not sure if you knew this, but we would like a credit for this, or we would like you to repair this. It's just an easier way for you to ask for more stuff if needed. You can actually take this opportunity here and use some of these home inspections to like really get more things than you normally would in the original purchase contract. They call it nibbling. Just try to get a little bit at a time. And then if the house is older than about 50 years old, you want to get a plumbing inspection. You want to tell your clients to get a plumbing inspection, because that has been a real big issue, especially out here. Plumbing can be really bad if it was, has not been maintained properly. Termite inspections are required in more than 30 states. If you all have not heard about this, it's a big thing. So you have this thing on the California contract called Section 1 and 2. It basically covers, you have this thing on the California contract where it covers inspections. You definitely want to put pest inspection in there. You want to ask for sections 1 and 2. So section 1 and 2 is going to be how the pest report is broken down. That basically covers all the repairs and everything. You want to make sure that all those costs go to the seller, because if you have a VA client trying to cover this, it can get really expensive real fast. Like for instance, I had this one house where they had $5,000 of termite damage that needed to be repaired. That's what they thought. Well, it ended up being $12,000. Fortunately, we had the seller pay for it, which was kind of nice. So they actually went in there and did all the stuff for my buyer clients. But imagine if I had to tell my buyers that all of a sudden they have to pay $12,000 out of pocket before they close. Like that would be pretty bad. So this is a requirement for most VA loans, that they do get the termite inspection. Also try to lump in that repair, because again, they can't close on the house until this is done. So you either end the contract, they fork up the money, or they have to move on. VA appraisal, it's the same as pretty much any other home appraisal. So this is different from the inspection, but basically the appraiser is coming by to make sure that the bank is getting their money's worth. So the VA has a list of approved appraisers. They actually go through and pick one of them. They have to notify you at least within 10 days. Once you get notified of who your appraiser is, he has, I believe, 7 days to come out and another 7 days to prep the report. So that's why I say that the typical closing time is going to be about 30 days. Typically, you're waiting on that appraiser to come through. I believe it's 17 days from start to finish for the appraiser to get done with all of his stuff. Okay, the close again varies by state, 3 days in Cali. So you're going to have the signing of the docs, the funding of the loan, and the recording. That stays pretty much fundamental to all places. It's just how long that takes changes. Once the loan is recorded, you'll get a text message or an email from your title company and more than likely your lender. And then that way you'll be able to actually go acquire the keys and give those to your clients. That's just kind of like a formal way of, giving them the keys to their own castle, right? So when you hand them the keys, that's your final farewell to your client, so to speak. Typically closing gifts, I don't know if you all ever heard of that, but typically try to do some closing gifts. Try to keep it fairly cheap and something that they're going to see most often. It'll help you stay top of mind. I'm not going to get too far into that, but and then we talked about this before. If you used the VA loan before, you definitely can use it again. So say somebody had a VA loan, they sold their house, and then they went with the conventional loan the second time, and now they're trying to buy a third house and they want to go back to the VA loan, they can. It's a reusable benefit. So and so something to tell your clients, their VA loan is going to be the most powerful loan option on the market. It's probably the easiest loan option when it comes to doing things. There's not a lot of loopholes that are hidden. So, and it's great that they don't have to come out of pocket with any down payment. Just again, try to make sure that all the repairs and everything are covered by the seller when it comes to the VA loan, because it is really tough to close on a house sometimes when there's known problems with it, right? So typically the lender is going to ask you to fix those problems before you actually close. Sorry, this is my normal PowerPoint for everything, but does anybody have any questions? Any questions from anybody?
I have a question.
Yep, go ahead, Benjamin.
I don't know if it's like a real thing or not, but I've heard about it. Is there like such thing as a VA construction loan where you can like build a house?
So it is, and what I'll tell you is you really have to shop around lenders for that. It does exist. There's a lot of loan products for the VA loan. You just have to go out there and find a military-friendly lender who is willing to do that type of loan product. So not all lenders do construction loans. Not all lenders do all different types of VA loans. So you just kind of have to shop around with the lenders if you are looking for something like that. Does that make sense?
That makes sense.
Okay, awesome. Any more questions?
Can I add to that VA construction portion?
Yep, go for it.
An easy way to search that down as well is if you can find a contractor who's already licensed and bonded and has built it before. So if you're not able to find the banks, it might be easier to find a contractor that says, hey, yes, we have the certifications to go ahead and roll it up into that construction loan land purchase. I found one that way. It was easier than trying to search a bank. I just found a construction company that was able to do it, and then they gave me the bank.
Yep.
Thank you.
Great comment there, John. Learn something new every day. Anybody else?
I have a question.
Yes.
So I purchased my home back in 2021 and I am getting out of the military because I know if you're a certain percentage disabled, you can waive the property tax like we were talking about, the exemptions.
Mm-hmm.
Does that apply if you're just now buying the home, or can you do it with previously owned homes as well?
So for your property tax exemption, it's whenever you meet the requirement, you can, well, at least in California. I'm speaking only for California here. I don't know that much about other states, but
I'm in Cali, so that's okay.
okay, yeah. So once you meet the requirement, you could just register for the property tax exemption.
Okay, cool.
Yep. Anyone else?
Yes, I have a question here.
Okay.
So, yeah, my question is kind of similar to the previous person that just asked, Nikki. Same situation. I bought my house in October 2021.
Okay.
So I've been in this home for 1 year, like 8 months now. July, August, September, October. Yeah, it's gonna be 1 year, 8 months, and I'm gonna retire this month.
Okay.
Can I retroactively get property? I mean, get the I forgot the property tax exemption. Yeah.
Yeah.
Can I get that retroactively? 1 year, 8 months later, if I get
Yeah.
like 50
Yeah,
or more.
so the property tax exemption is when you qualify for it. So you could essentially have a loan as an active duty person, and then say you get out and you get 100% disability, you can actually apply for the property tax exemption still, right? So you should be good. But if you're in California, in order to get that exemption, I believe it's 100% disability. So just so you're aware. So it's it's not as easy to get as it seems. There's always a catch to everything, right? But yeah, the minute you qualify for it, you should be good to go. Sorry, Joseph brought up a good point, and maybe it's how we're wording this here. You won't get money back for previous tax years. It'll just be from that moment that you apply, right? So once you apply for it and you meet the requirements, and a good catch, Joseph, because I never really think about how things are said sometimes, but yes, once you apply for it from that moment forward, you will get the exemption, but not previous to that. You won't get back pay for all the taxes you've already paid. So.
Yeah, I just wanted to make sure it would start if I get 100%, that I could actually still apply for it. So
yeah,
I know it wouldn't back pay. They don't. California doesn't do that.
Yeah. And CalVet has a lot of useful information when it comes to stuff like that. There's also the CalVet VA loan. I think it's CalVet VA loan. They might call it the CalVet home loan. But also look into that as an option for your clients as well. I heard sometimes they can work with people a little bit better than others. CalVet actually gives the loan directly from what I've heard, but I've never actually done it. So take that for a grain of salt. Anyone else?
Yeah. So what about the VA funding fee? I paid like $22,000 for that when I bought the house in October 2021.
So you won't be able to get that back.
Wow.
If you had bought it as a whatever percentage it is, disabled veteran, I can't remember. I think it's over 40. I could be wrong. But if you had bought it at that point in time, then yeah, you would have been able to not have to pay it, but they won't refund you for anything. Typically, they won't retro date anything. They only give you stuff for credit for the future. That makes sense?
Yeah.
Anyone else? No more? All right. Well, if there's no more questions, I'll hang out for a minute, but feel free to have a nice day, and I'll talk to you all later.
Appreciate you, Ryan.
Likewise.